Nifty 50 at the end of today, which is March 23rd, we are actually recording today, has closed battered and down almost 15% from its peak. Realty index, which mirrors real estate, mostly housing, is down by 37%. So the question we want to get absolutely real about today, will India's property markets crash next?
Everyone will get impacted, but we will be the first one to recover. Yes, listed players will have more pressure because they have a Q on Q pressure and they will be compelled to come to certain schemes or reduce the prices because they have to show Q on Q performance.
So yes, absolutely right. The overhang is rising, and between 24 and 25, the housing property market had already started turning around. It's the elite class which is above 5 crores, which is less than 10%, Manisha. They will be impacted by the 15% fall, and impacted in the sense they will just slow down or pause or delay the decision.
If this prolonged, definitely there will be some worrying signs. At least the perception or sentiments will weaken, and that might impact the homes. Yes, people are trying to put a situation where if stock markets remain like this, we might not be able to honor your payment.
The US-Israel-Iran war has entered its fourth week, choking the global economy's energy lifeline, the Strait of Hormuz. Brent crude prices have risen 50% since mid-February, now above $110 a barrel. US President Donald Trump's aggressive ultimatum to Iran to open shipping routes and Tehran's defiant response have reduced the possibility of an early end to this war. So, inflation is creeping up. Economists are busy calculating impact of the war on GDP growth of different countries and global economy. India is even more vulnerable because of its dependence on oil imports. So what has happened? Well, stock markets are rattled. Nifty 50 at the end of today, which is March 23rd, we are actually recording today, has closed battered and down almost 15% from its peak. Realty index, which mirrors real estate, mostly housing, is down by 37%. Sales volumes in India's top 8 cities, and this is an important point to remember, these 8 cities make up for a majority of housing market. These were shrinking, the sales volumes were shrinking even before this war crisis arrived. Anarock says sales of housing units was down 14% in 2025 vis-a-vis 2024. Prop equity data says they were down 17%. CRE matrix puts that number at a 2% decline. Note this, several property micro markets are now close to or are breaching the 24-month safe inventory overhang of unsold units. Now, what does 24 months mean? 2 years to sell the existing supply. We will reveal the names of what micro markets are these. So the question we want to get absolutely real about today, will India's property markets crash next? Will home prices finally correct, or is it wishful thinking? Let's get the experts to weigh in. We've got Amit Bhagat, CEO and MD, ASK Property Fund. Also with us, Pritesh Sheth, Lead Analyst, Real Estate Axis Bank, and Abhishek Kiran Gupta, CEO and co-founder, CRE Matrix. Gentlemen, thank you very much for making the time. I know these are not easy times to make a call, but Amit Bhagat, my first question is to you. It's looking like military de-escalation is not happening anytime soon. Your money is invested in builders. What is your assessment and how much will sales slow down and will prices finally come down?
So let me also give some advantages which India has today vis-a-vis all other developers in the emerging and developed markets. We are not leveraged. Most of the developers, listed ones, are zero leverage or sitting on cash. We are a very resilient market, as we have seen in global financial crisis, 2008. We have seen it in COVID. We were the first one to recover. And hence, I am very optimistic about this market. We are also not directly impacted by the war, but indirect impact will be on all the countries in the world. We can't escape when there is a fire in a forest. Obviously, some people who can visualize the impact of the fire will be the first one to run away from the forest, but others will also follow, and there will be a herd mentality also. I am not a geopolitical expert, so I don't want to comment on the continuity of the war and how much it will take. But it is a vicious circle. Everyone will get impacted, but we will be the first one to recover. Yes, listed players will have more pressure because they have a queue on queue pressure, and they will be compelled to come to certain schemes or reduce the prices because they have to show Q on Q performance. Others who are leveraged will also get impacted, but majority of the market is not leveraged as we speak. And our demand will continue to be robust once these clouds of war are over.
All right. You said listed players could be impacted in terms of having to cut down or bring down prices to maintain their sales. Now, these are also the best or the most branded developers of the country, which we encourage people to buy from. If they cut, don't you think the rest of the market will have to follow? The developers who are lower down the ladder will just have to follow that as well, bring down prices?
So if you go back to COVID times, which was the worst of the times we have seen for a much longer period, there was a correction in that period, but then there was a hockey stick like recovery. If it all depends on the continuity of the war for, if it is for a longer period, yes, there will be a pressure on prices and absorption, and people will focus on cash flows because cash is king. And thereafter, there will be a hockey stick like recovery because of our inherent strengths.
All right.
You are absolutely right. We are an import dependent country, and we are very dependent on import of fuel. Our fuel prices can also spike the inflation. It can impact steel, cement, and every price, and it can cut down on the margin of the project because the construction costs also partly. And everyone becomes a fence sitter in these uncertain times, especially the HNI and the ultra HNI. And hence, there will be a pressure on sales and prices, but it all depends on the continuity of the war and the duration of the war. And after that, I see a hockey stick like recovery.
All right. Fair point. Let's go to some more data. Abhishek, your data along with prop equity data, Anurag data, is not just showing that, you have sales slowing down, varying degree, but unsold inventory across top 7, 8 cities has also risen, right? Your own data, CRE matrix, inventory overhang in many of the markets has touched 24 months or crossed 24 months. And let me just reveal these names to our audience. Navi Palghar is at 39 months. Navi Mumbai is at 35 months. Mumbai at 33 months. Thane at 31 months. Hyderabad 31 again. Pune 26. Ahmedabad and Gandhinagar 26. Delhi 25. Raigad 24. So here's my question to you, Abhishek. We always say that under 24 months of inventory overhang, that is the time that current supply will take to get sold, is actually healthy. You cross 24 months and you're staring at a slower market and therefore more uncertain market and likely pressure on prices. Now, add to this data the war worries right now, capital markets also, the capital flows coming down, people making less money. Tell me, how are you reading the tea leaves?
So let's look at the overhang first. So yes, absolutely right. The overhang is rising, and between 24 and 25, the housing property market had already started turning around. So we said it in multiple forums that if you are a buyer of a house who's very particular, constrained, मुझे sea view ही चाहिए, मुझे यही floor ही चाहिए, मुझे magnolia ही चाहिए, so then buy a house now because you will not get it. But if you're a guy who's more patient, you don't have so many nakhras in life, you are in for a party because the next 1 year you're going to have schemes, you're going to have discounts, you're going to have everything coming your way. People will call you, you don't have to call them. War, no war. Manisha, let's look at some numbers. Hindustan में 5 lakh घर बिकते हैं across these 8 cities. Out of that, apartments that sell under 1 crore is 60%. Okay, these guys are under 1 crore. I'm going to repeat that again. 60% out of 5 lakh homes.
Okay.
The minute you add it to tier 2 cities and state capital, it goes to 10 lakh homes, and that is 75% above below 1 CR. These are apartments bought by individual salary people. War, no war, bhad mein gaya. I don't care. Salary time pe aa rahi, I'm good. It's the elite class which is above 5 crores, which is less than 10%, Manisha. They will be impacted by the 15% fall, and impacted in the sense they will just slow down or pause or delay the decision. Let's all agree कि घर की demand is endless in India. This cycle, war, whatever is not so it is not affecting demand. It's basically causing demand supply cat and mouse a little more augmented. That's all.
So you're saying under 1 crore, let's not worry because this is a salary class home. They will buy irrespective of war or no war. You're saying 5 crores and above will get affected because people can easily, they probably are already sitting on their first home, so they can easily push out a lifestyle upgrade or a second home. Fair point, but there is a huge market between 1 and 5 crores. What happens to that?
Yeah. So if you look at, let's forget about the 5 CR. Let's even take the 3 CR and above, right? So I'm taking less than 1, and then I'm just skipping 1, 2, 3 for a minute, and then above 3. My worry is what you said earlier, that if this gets prolonged beyond May, and that's when the crude really starts pinching. See, as of now, the Indian government has very smartly absorbed whatever they can absorb. And they've done that before. So there's precedence that the Indian government absorbs the rise up to a certain level. Beyond that, if they transfer it and the inflation starts hitting, rising, and if the interest rates goes up, then I'm in for a big worry. And I'll probably talk about that a little later. That's my only worry. So the prolonged
Okay,
war-
we'll come
Yes.
to both the construction costs and interest rates a little bit later. Pritesh, let me come to you. I've gone through all your reports and you're one of those, long-term sell side lead analysts, researchers who understand the real estate market so well. You go visit Hyderabad, visit Bengaluru, and then you come out with your numbers. You're saying that none of these cities are really worth worrying about, but both your reports were done prior to the war, right? Hyderabad's inventory overhang, you say don't worry about it. Bangalore's real estate market, you say the AI software related job loss or worries are overblown. Tell me now how are you feeling, because everyone's now talking about salary freezes, no bonuses, and probably more job attritions to just keep their margins intact.
Yeah. So yeah, I think we did this visits actually after war, but it was just at the initial phase of the war. So people, don't tend to get overly worried about. But yes, I agree with the other two participants. If this prolonged, definitely there will be some worrying signs. At least the perception or sentiments will weaken, and that might impact e-homes. Now, I was doing some number crunching. About 10 crore homes, in terms of number of units, it's just 4%. In terms of million square feet, it's just 5%. Obviously, in terms of value, it goes up. It's still 15% of the overall market. That's how I see the about 10 crore, which would be the segment which might get impacted because of what's happening in stock market. I was other day, met a premier developer in Mumbai, and they largely deal in luxury homes, premium and luxury homes. Uh, they are saying, in fact, that as of now, uh, at least on the demand side, there is no worry. Yes, people are trying to put a situation where if stock markets remain like this, we might not be able to honor your payment, which is due over next 3-4 months. But at least, war and stock markets are not something which is right now impacting their demand decisions. They are going ahead with demand. Only thing that they are negotiating is on the cash flows and the timelines of those cash flows. Barring that, I don't see, since I would say 60% of India's demand, housing demand is largely led by salaried people. And for them, I think if salary is coming, there's no worry. There would be few participants who are relying on bonuses to buy homes. Otherwise, most of them take mortgages, and that sort of demand, I don't see that getting impacted if we have a near-term solution to this conflict which is happening.
So what we are agreeing to is that markets, Abhishek says, Amit Bhagat says that if the war gets prolonged, we will see a downside. Builders will be forced to cut prices, but we will also see a hockey shape recovery as we've seen in the past. Abhishek is saying that look, above 5 crores is where, or above 3 crores is where you could see some distress, definitely above 5 crores. But under that, and that's your largest market, he doesn't see a distress. Again, same thing you're saying. You push that number, Pritesh, to 10 crores, that okay, above 10 crores could be in trouble, but the rest of it is inherently strong. But I'm going to push all of you on this point because this is a really important point. There is this belief that real estate prices may, flatten, but they never go down. We busted that. They do go down. And Amit Bhagat has said right up front, developers could be forced to cut prices. Now, during the Q3 FY26 earnings call, Pirojsha Godrej explicitly acknowledged that sales momentum has slowed down in some markets like NCR. Abhishek, the reason I'm bringing NCR here is because it's also the most investor-driven market, right? Your data shows that Gurgaon is only at 10 months inventory overhang. It's not looking dangerous, but developers are saying that there is going to be a slowdown. Now, let's look at Mumbai, where there is already a lot of inventory overhang. 30 months, 33 months to me is not comfortable at all, whatever anybody says. Abhishek Lodha was more diplomatic when he said, there are some challenges of being in the fifth year of a growth spurt in the real estate market, but we find that the overall outlook continues to remain constructive for Mumbai. Inventory overhang is saying something different. Signature Global has admitted in a regulatory filing in January that they will not be able to meet their pre-sales guidance and are looking at zero growth rate in the coming financial year, one of the most nimble, smartest developers. Amit Bhagat, now point out to micro markets which would be your biggest worry.
I think every market has its own nets. If you look at Mumbai market, as you rightly pointed out, it is a function of capital markets, how capital markets behave. If capital markets continue to be muted or degrowth in that, Mumbai market will get severely impacted. And I think everyone who's in HNI, because he's more enlightened with all the problems, micro and macro, will be a fence sitter or will prefer, if he is a user, to negotiate a deal and a bargain with the developer, and developers will have to give in to their demand to ensure that there is a cash flow in the project timely completion. NCR, as you rightly mentioned, is more dependent on investors more than any other city, and we have to also keep in mind that the Middle East remittances will get impacted if the war continues. And likewise, Indians who were investing in the Middle East will also take a back seat. So I think every market will get impacted when there is a war-like situation and there is a degrowth. IT companies' orders will get impacted, and hence their increments and bonuses and the job creation can also get impacted. So every market has dependence on IT is obviously Pune, Bangalore, Chennai, NCR. But Mumbai is more dependent on capital markets. So I think it'll be fair to say that every market will get impacted if war continues.
Okay, Amit Bhagat's already saying that, look, none of the markets could escape this, but it's all dependent on how long the war continues. Abhishek, would you like to take a bet on what this length means? Does it mean that 4 more weeks if it gets into May? And if it does, are there any particular markets? And now I'm not talking about price points. We've already established everything under 1 crore will sell in India. It's 3 crores and 5 crore plus that we are worried about. Which micro markets would you worry about the most?
NCR, Hyderabad, and Bombay City. I'm not worried about anything else.
Okay. All right. That's a fair, sharp answer. Quickly, one line on why each of these cities.
So Bombay has nothing less than 1 CR. So automatically, given that we have already established that 1 second each bikta hai, yahan pe hai hi nahi, so obviously I have to worry about it. Hyderabad saw this crazy frenzy of madness sales, same as NCR. I think both these markets have massive similarity because they all like bigger homes, they like expensive homes. So they have huge similarity. And because everything over there is more than 2.5, 3 CR, I would worry about these markets a little more than anything else because they saw this huge rally of not only price growth, but also sales, launches, everything.
Pritesh, my question, I'm not going to gun you down on a market because, you've already done your study and as of now, you haven't seen the big worries. Uh, if the mortgage rates go up, right? If the war prolongs, there will not be a choice. Inflation is already biting us a bit. Steel and cement prices have started going up and government will not be able to control how much are oil companies going to absorb the losses into their bottom line. At some point, prices will go up. My question is, does a hike in interest rate worry you a lot? And if it were to go up by about 0.5% to a little more than 0.5% in this year, right? How do you see the impact?
Yeah, so thanks, Manisha. So we have done a study when I think interest rates were going up last time. I think it was June 22 when RBI had suddenly taken a 50 bits increase in repo rates. Our study suggests that until 120, initial 120 to 150 basis points of increase, there is no impact as such on the housing demand. And we've seen, Manisha, right? I think interest rates went from 6.1%. I mean, mortgage rates went from 6.1% to 8.7%. I think industry was still doing well. Obviously, the kind of demand that was there persisting was largely on the upper middle income premium side, where people don't take more than 40-50% of the mortgage because most of the equity of the house gets funded through existing investment somewhere or your existing home. So that category doesn't take too much of mortgage and hence they are not worried. And plus, also what happens is that banks don't increase the EMIs. Okay,
Oh,
they
Pritesh,
just the
I'm so
tenure.
sorry. Let me burst that myth completely. Banks do not bring down interest rates as soon as RBI cuts interest rates. But when it comes to raising it, it happens very quickly. And I've done an entire show to show that timeline, right? I'm sorry.
Yeah,
Complete
yeah, but
disagreement on that front. They are very
no, no,
slow
I
to
think
bring it down. They're very quick to raise them.
so. One is interest rate on the face of it, but what happens is when they increase the interest rate, they don't increase the EMI amount. EMI amounts are fixed. They adjust the tenure for it until it goes up to 35, 40 years, which is where they come in and increase their EMIs, right? So they don't increase the EMI.
Abhishek, you disagree because you mentioned that if interest rates go up, that's another story.
Yeah, yeah. So I completely agree that 0.5 up to 1%, I don't think that's a big difference because you're looking at a tenure of about 20 years. Of course, the average Indian probably repays their loan in 8 to 10 years. So it's still a long period. And I don't think anybody will agree that the war will go on for 10 years. So, वो तो कोई problem ही नहीं है. But it's a sentimental thing, right? Don't forget the stock market moves on rumors and settles on news. Minute the RBI opens their mouth, it doesn't matter whether it's 0.25, whether it's 0.5, whether it's whatever. There will be a sentimental push downwards only. There's only one way, which is downwards, right? And it impacts everybody. Amit will also start thinking कि पैसे देने के लिए developers को. Buyers will start thinking कि बाबा खरीदना है कि नहीं खरीदना है. You will start thinking मैं show करूँ कि नहीं करूँ. So you.
तो कैसे बिल्कुल करोगे जैसे ही इंटरेस्ट रेट्स बढ़ेंगे. Anyway.
0.5, not a big deal, but yes, we have to keep a very close watch on inflation.
There is a sentimental impact. There is no doubt about it. And we are talking about the fact that the whole market, Amit Bhagat, I'm going to come to you. Whole market is premiumized, right? Suddenly we are talking of numbers that, oh my God, huge number of sales have happened in, by volume, yes. The market above 5 crores may be small, but value, and look at where the listed players are launching and at what prices barely anyone is launching at less than 2 crores. So, Amit Bhagat, till what point of interest rates do you feel that the sentiment will not get impacted? And at what point do you think there will be an impact?
I think interest rates will definitely impact adversely the prices. The only, Breather is that developers will reduce prices and that will compensate for the price increase. But sentiment is a huge issue and everything is interlinked, whether it is petrol prices, inflation, interest rates. But let us also understand that central governments are very proactive nowadays. We have seen it in COVID times and in all other times how positively they react and very quickly they react. So they will also be very quick to react to bring in measures of risk weights or any other means to ensure that the interest rates do not go up significantly. But everything is not in their control because it is linked to inflation.
Let's talk about now the other big worry that I have. All right. Because of RERA, every developer is already taking a timeline of completion of 6 years to 7 years. When they sell, their salespeople say, Arey, 2025, every project has been sold, saying 2029 they will be completed. And once you've signed that 10% check, you find out, oh my God, but RERA deadline is 2031. So this is happening and it's widespread. There is no getting away from it. Now you have a construction slowdown that you could be staring at because of rising input prices. 28 lakh units. Abhishek, CRE matrix data, 28 lakh units are going to come in the next 5 years, right? Are you worried? I'm really worried about slowing construction more than anything else.
Manisha, see, when we started, I told you 5 lakh new homes get sold in these top 8, 9 metro cities. If you multiply that by 5, that's 25 lakhs. 28 RI, aane do, no problem.
No, 25 hai. You're right. The number that Chiju sent me was 26 lakh units. So you're right, 26.
So jitna aa raha hai, utna bik raha hai, I wouldn't worry about it. The problem is when it starts getting interesting, when the pricing element starts to play in. Yes, if this cement rises and the labor cost rises and all of this rises, again back to inflation, there will be a problem. Developers might be staring at higher cost, but they have made lot of money in the last 5 years. Yaar. They can absorb it easily.
ये
Come
दोबारा बोलना अभिषेक, because whenever developers come, they say हम नहीं बना सकते, हम उतना पैसा नहीं बनाते. दोबारा बोलिए.
नहीं, ऐसा नहीं है. After COVID, I think the developers have had a great cycle of 5 years. You yourself mentioned, Mr. Lodha mentioning it. So they can absorb at least some cost because there's no way they can increase the prices. यहाँ तो price गिरने की बात हो रही है. We're trying to refrain that, and that's not happening, right? So if we are agreed that they cannot increase prices at all, it's going to be stable or damn. So they'll have to absorb it.
Amit Bhagat, are you worried as much as I am on construction delays? You're lending to these developers, so this should be a nightmare for you as much as I'm worried on behalf of the home buyers.
I think you rightly pointed out, Manisha, that everyone has taken a buffer of 2 years in their RERA construction schedules. So I am not worried. I think I am more worried on the absorption, and absorption will be a function of affordability and price and interest rates and the sentiment. And I am not worried about the construction schedule. Yeah, it will impact the margins, but the margins of real estate are still in the range of 20 to 30% are the EBITDA margin of all listed real estate developers. And they can get impacted, but I am not worried because most of the developers are not leveraged. And if the listed developers will have ability to raise more equity money, in fact, this will be an opportunity for fence sitters who are end users, they should buy. People who are fence sitters for second homes, they should buy. And they utilize this opportunity to invest in all these real estate companies if the market falls further. And this is an opportunity for all of us, a counter-cyclical, to invest more because we are not leveraged. We are the only country in the world where banks are not allowed to finance buying of land. They cannot refinance it. Non-banking finance companies had an arbitrage. They messed it up. And hence, they are also not permitted to finance a project till RERA is in place.
That's why the
And
buyer
instructionally,
finances,
we are
Amit
very
Bhagat, that's why the buyer finances in this country. Okay, that's another story. I'm not going to pin you down on that. Of course, the buying momentum has to continue for all the builders to make money. Pritesh, Amit Bhagat has said not just buy homes, but also look at equities. He's done half your job. But yes, go ahead and tell me. I mean, some of the top stocks are down 30-40%. Is this a buying opportunity? Are you seeing some buying coming back in real estate stocks, or do you think there's more downside left? This is just the beginning, so wait it out a bit.
So perceptual downside, maybe yes. I think if market remains as jittery as they are, real estate can't remain immune to it, being a high beta sector, high risk. Uh, but otherwise, there has been some interest coming back on in terms of where valuations stack up, who is placed better. So at least interest is coming back, which probably wasn't there since last 6 or 12 months. So good to see that. But on the bottom, I won't stick my
There's no
neck out
bottom
whether-
fishing yet.
Yeah,
There's no
I-
bottom
I-
fishing yet, right? It's still
Yeah.
it's still looking like it could go down much. It could go down much further. Fair point. Abhishek, to a current home buyer, what would you say? Wait and watch. 2026 could give you great opportunities, or wait it out longer. Push it out to 2027. One line answer.
One line answer is that if you can really wait and you are flexible in terms of khadda to ready, yes, you're in for a party, you're going to get discounts. But if you're too choosy, please buy today.
That you actually said right at the beginning as well.
We strongly believe in that. Strongly believe. Choice ka ghar nahi milega. If you're flexible, wait. If you're not, today.
Okay, 3 crores today. What would you ask somebody to do? Buy property, buy equity, or sit on cash? Abhishek, Kiran, after that, I'll go to the other two guests.
Buy property, buy equity, sit on cash.
Yes.
I would sit on cash. And
Sit on cash.
and
Sit
otherwise
on
then buy.
cash kills you. All right. So you're saying the worst is not over yet. That's the thing. Amit Bhagat.
I think if you are a user, negotiate hard and buy property. If you are a user, if it is an allocation as an investment, then divide between cash and equity and wait for the war to get over.
Okay. Pritesh, I've already got your answer. So, gentlemen, thank you very much for being honest, for being upfront, for saying, look, if the war prolongs, the top developers, listed developers are going to be forced to cut prices. There is no way out. So 2026 is likely to offer you that final opportunity that you've been waiting for. Well, but do we want the war to be prolonged? Absolutely no. It's not good for anything. And just for a property crash, that's not what we are hoping for. Gentlemen, thank you so much for joining me.